Gaurang Shah who are joining us. Good morning, Gaurang, as well as Kunal. Thank you so much for joining us on ET Now. And firstly, Happy New Year to you, Gaurang, because we've not wished you yet. But let me get going with the queries because they're actually pouring in as we speak. And this first one I've got is from Natarajan Ramesh. He's saying that he has 190 shares of Tata Communications, which he's purchased at 1,329 rupees per share. He wants a long-term fundamental as well as technical view. His horizon is 3 years. So I will go with the fundamental view. Gaurang, Tata Communications, how does this counter look to you? You think that makes sense for Natarajan to stay put with this holding?
Thank you so much, Cheryl, and good to see you back in the studio in the new year, and wishing you, your entire team at ET Now, and all the viewers of ET Now a very healthy and a prosperous new year 2022. So on Tata Communication, yes, fundamentally we do have a positive coverage, and I think over the last year and a half, a lot has changed for the company in terms of business outlook and opportunities that lie. And now with the new normal and the growth areas where Tata Communication is focusing, our sense is that there is a lot to go on the higher side in terms of numbers turning out to be in line or better than expected, and in terms of the share prices, because it reflects what the company is doing. Having said that, if the investment is from a long-term point of view, continue to hold on. And if you do want to look at getting into the stock afresh, then maybe any level sub 1350 would be a decent level to make a fresh entry, or if somebody wants to accumulate further in case if the investment is made at high.
Gaurang, hi. Another question coming your way. This is a tactical sort of a question, and it relates to portfolio management. We've got a viewer, Aarti, who's asking whether it is time to shuffle the pack, in that should she reduce the weightage on mid-cap IT and increase the weightage to that extent on private banks. Of course, this is something that is playing out over the last 3 or 4 sessions in particular, where you've seen some of these IT names getting drubbed a little bit. But is this just recency bias, or is there merit in this thought?
Well, hi Alex, to you as well, and wishing you also a very happy 2022. So unfortunately, what I don't know is the investment level for this investor in terms of what levels he bought mid-cap IT stocks. Having said that, if I have to purely go by the last couple of quarters earning and return on investment, that is ROI, that mid-cap IT companies have actually outperformed large-cap IT companies. And if you also take into consideration the verbatim that was given by almost all the management of IT companies post Q2 earnings, then the outlook for business looked extremely strong and very promising in terms of getting new big-ticket clients and servicing them from a longer contract point of view, Alex. So we as a brokerage house still remain positive. We are equally positive on private sector banks. Alex, I have mentioned this a number of times on your show, Buy Now, Sell Now. And I would only say this to her, that if you are having a little bit of elevated risk appetite, which I believe you should have in equity markets, Alex, then continue to hold mid-cap IT companies, at least till the time we see the third quarter earnings. And post that, I'm quite sure you will get a little bit of more elevated levels to maybe book out completely or half and then make a switch to private sector banks.
All right, this one is from Kaustubh, and he wants a technical view on Yes Bank, which has recently crosses 200 DMA with decent volumes. He wants to know how much more can the stock run. Kunal, what's your take on Yes Bank? It's actually seeing strong moves of late. What should Kaustubh do? What sort of levels can he look at?
So it's a long distance away, frankly, Yes Bank, to try and get back to its glorious days, for itself. But then the recovery in the last, I think 6-7 months for Yes Bank from I think July or August lows of 10.5 to 11, I think has been quite stellar. Yes, the stock has broken past about 200 moving averages. In fact, just about 2-3 weeks back, I had done Yes Bank as a chart buster segment as well, indicating that the stock is nearing the 200 DMA breakout and could probably provide an upside till at least 15 to 17 and a half kind of level. So we've already seen levels of 15 being reached for Yes Bank. If the stock manages to sustain above 15 mark, then I believe that the next set of targets for the stock opens up closer to 17 and a half levels for Yes Bank. So it all depends on how the stock sustains about that 15 mark, and if we see that happening for Yes Bank, we could be looking at least another 2.5 to 3 rupees on the upside, closer to 17 and a half levels.
Okay, the next one is also for you, Kunal, and Goodyear India is the name of the counter. As I see it, not much in the way of volumes. We've got a viewer who has Lalita, who has bought at levels of 990, which is close to the market price as it currently stands. She says that she can hold for a year. Should she do so, or should she book out and move to something else?
I think definitely book out and move to much better quality names. Now, I would suggest maybe a couple of alternatives. If you're looking at the tire stocks as such, then you can look at something like Apollo Tyres or Balkrishna Industries at current levels. These stocks have gone through a 12-month of almost like a 12-month of consolidation for themselves. So a breakout could be in the offing anytime soon for these names. And which is why I believe that the timing for buying these stocks or shifting towards these names could actually turn out to be a much better timing zone for these stocks. And also, I think on the other hand, if you're looking at some other auto anch names, then you can look at either a Bosch Limited at current levels, even though the stock is a bit of a high denominated stock, or some of the other names like Motherson Sumi is also poised quite well for a from a near-term breakout perspective. So depends on what could be your risk appetite as well as time frame. But I would suggest that definitely switch out from Goodyear to either Apollo Tyres or Balkrishna Industries, or you can look at Bosch or Motherson Sumi.
All right, I would request my producer to show the line graph for Apollo pipes. This one is from Soumitra. He's saying he's holding significant quantity of Apollo pipes at sub 100 rupees level. He's saying recently the stock has seen a decent correction, so he wants to know what should he do with his holding currently. The stock, as we can see, is actually trading at over 550 rupees a share. At the 52-week high was 680 rupees per share. So what should he do with his holding, Kunal? Do you think that he should book profits from Apollo Pipes?
Well, I think yes, you can look to book out profits. Even though the stock has had a good history last 14-15 months for itself, but somehow I'm sensing that the stock is getting into a time-wise correction. Possibly, the next maybe 2-3 months, the stock could remain into this time-wise correction and get into a sluggish kind of a downtrend for itself. So I think it could actually turn out to be a good switch from this stock to maybe the sector which has started to show signs of reversals. You can look at either banking names or auto stocks at current zone. I think that could be a much better switch rather than sticking towards Apollo Pipes.
Okay. Excuse me. Gaurang, this one's for you. Vijay is asking about Z Entertainment. He's bought at levels of 330, which again is not too far away from the current market price. But he's asking what his view should be on the fundamentals. How do you see it? A lot of churn and change in this company in the recent past.
Well, absolutely right. And thank God, Alex, that the news flow is done and dusted, and we have finally delivered the verdict in terms of seeing a large entertainment house coming up in terms of Z as well as Sony. So overall, we remained positive on the deal as the joint entity, and our sense at Geojit, Alex, is that with the kind of presence that Z has in terms of the bouquet of channels that it offers, and along with that, you have a powerhouse in form of Sony joining hands with Z. So you will definitely end up commanding a large part of the market share in the entertainment universe, and with the penetration of Z in terms of regional language, business opportunity will definitely be plentiful. The only thing, Alex, is that the entire process may evolve over a period of time. So you should have at least about a year and a half time horizon for the joint entity to stand up and deliver in terms of what has been said, and that to reflect upon the numbers and then onto the share price. Hence, a year and a half is definitely required if you are invested in the entertainment.
Okay, this next query that I have is from Abhijit, and he's saying he has 200 shares of Aurobindo Pharma, which he's purchased at 850 levels. He wants a long-term outlook on this particular stock. He wants to know whether he should look to exit. Gaurang, should he look to exit Aurobindo Pharma? Long-term prospects strong for this particular pharma giant?
So, Cheryl, absolutely strong, and I don't think you should be in a hurry to get out of Aurobindo Pharma. On the fundamental side, we do have a buy call on this one from the pharma universe, and the recent news flow augurs well for the business opportunity for the company. And not to forget, the new normal that all of us live in, and the kind of new avatars that we have seen, we will be seeing in the future. Of course, one doesn't know the timeline of it and what form it will come and how serious it is going to be. But my sense is that the Indian pharmaceutical industry was the pharmacy to the world, and it will remain pharmacy to the world. And some companies will find tremendous opportunities in terms of growth prospect, and Aurobindo Pharma happens to be one. Now, just in case if you got in at Aurobindo Pharma at a higher level, and if you have investable amount, I think levels closer to 700 should be used as buying more shares to your existing investment, or if you want to make any fresh investments.
Okay. We've got a question coming in from Rajan, and he's asking for a short-term view. Kunal, on ICICI Lombard, he's gotten in levels of 1,444, and he's looking for the next 6 months or so.
For the next 6 months, you could probably look at a target potential for ICICI Lombard at say somewhere close to 1550 1600 mark. But I think the entire insurance space looks quite strong, and I think out of them, if I have to pick and choose, then I think SBI Life looks to be a much more stronger stock. The trends for the stock are is far more durable, and we've seen a very strong and a solid breakout coming out for SBI Life. So if you have that possibility of shifting from ICICI Lombard to SBI Life purely as a much more better alpha possibility, then I believe you can make that switch. But if you still want to stick to ICICI Lombard, then you can look at 1550 1600 as a target potential for the next 6 months.
Okay, this one is from Harsh Ranjan, and he is holding Chambal Fertilizers from the levels of 400 rupees per share. He wants to know whether he should go ahead and book profits in order to avoid any downtrend or losses. What's your take, Kunal? What should Harsh do? Do you think that he should stay put with his holding or go ahead and book profits? Because definitely he is worried that if there is any correction or so in the counter.
See, I remember clearly, I think Chambal Fertilizer was also one of the picks which I recommended just around that 400 mark for the stock. It's now after almost like a couple of weeks of consolidation given a breakout. So the breakout seems to be very strong. Today the volume spike in Chambal Fertilizers is very strong. And also there's this tendency for many of these fertilizer stocks that just prior to the budget, these stocks are into the thick of price action. So rather than booking out your profits, I would suggest that if you can have a trailing stop loss mechanism, maybe book out part profits over here, but keep the remaining part and look out for higher levels, say closer to 455, 460 as a potential target for Chambal Fertilizer. I think that could actually turn out to be a much better strategy, because there you can probably capture the entire trend rather than probably getting missed out and booking out at the first stage of a breakout for a stock like Chambal Fertilizer.
All right, Gaurang, quick view on Adani Power. We've got Aarti, who's gotten in at levels of 103.5, and she's looking for a long-term view. Would you suggest holding on or switching to something else in the power space?
Any of the companies in the Adani group, and if there is a switch that the investor is asking for, my sense is Tata Power would be the best preferred stock in this power generation universe, Alex.
All right, with that, let's kickstart with the rapid fire segment then. And first one is coming to you, Kunal, and this one from Arvind. He wants to know about Whirlpool. Should he look to enter this stock right now?
Not really. I believe that the stock is still into a downtrend. You should clearly avoid the stock.
Kunal, RCF is the name of the counter, very, very short term, intraday purpose in fact. We've got Puneet who's asking, should he consider a trade here?
See, if the stock breaks above the today's high 81.2 levels, then it makes sense to buy the stock. You can keep a stop loss of 79.6 and targets would be kept at 83.5.
KJ Singh wants to know about mid-cap IT sector worth investing for the longer term. If yes, which of the counters that he can invest in? Gaurang, what's your take?
So we remain positive, starting with Mindtree, Coforge, Persistent Systems, Sank Limited. These are some of the mid-cap IT names that we are positive on.
Okay, we've got Sunny Kunal who's asking about HDFC Life. He says that he's bought at 572 and he sees that it has underperformed a little bit over the last year or so. Is there a breakout on the cards though?
Yeah, I would suggest that if it's a slightly short-term query, switch towards SBI Life. That's a much more stronger stock.
Okay, KJ, I beg your pardon. Sapna wants to know about AB Capital. Already holds holds some shares at 129 rupees per share. What should she do, Kunal, with this counter? AB Capital.
Yeah, I think it's nearing a big breakout on the monthly charts. I would definitely suggest a hold on AB Capital.
Okay, Gaurang, HDFC Bank and Kotak Bank, Divya wants to know, would you increase exposure at the current level?
I would definitely, because we are positive on both, and I would advise her that go ahead and increase allocation. Our sense, Alex, is that the recovery in second quarter is going to here to stay in terms of lower NPAs and lower provisioning, and both of them are a preferred investment idea in the private sector banking.
Alright, and with that we come to the end of the queries as well as rapid fire. Thank you so much, Kunal, as well as Gaurang, for joining us on the show, giving us your take on what the viewers should do with their holding right now. And a couple of our viewers actually wish to both of you all a very happy new year as well. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. But stay tuned, more on the other side, so don't go anywhere.